since my last video, so much stuff has happened with both Tesla and Tesla stock, so I'm back again to break it all down. It can be quite scary and quite intimidating if you don't really know much about what's actually happening, and if you have Tesla in your portfolio and you keep logging on and you just see it go down and down and down. But of course, it's really, really important to actually understand the company behind the stock. Know enough about that company, do your own research so that you can have strong conviction and you can contextualize and actually understand what's happening and whether or not it really matters in the long term. If you need help with that and you want your own blueprint for researching, finding and staying up to date with your stocks, I have an entire 4-hour video workshop. It's really quite intense, it's comprehensive, it's not for the lighthearted. If you do want to take part in that, there is a link in the description below. Alrighty, so what's been going on with Tesla? Well, firstly, let's just discuss that in a few days, it's Friday the 19th as I'm filming this, a few days on Tuesday, post-market, we will get their earnings. They are going to be reporting on the quarter that saw their deliveries fall. So you might think that actually that means that the earnings are going to be really bad and they're going to miss estimates. However, estimates have been lowered, so they could actually come in with a beat. But the way I'm looking at it is, yes, it could be quite volatile, leading up to earnings and post earnings. It could be that Tesla actually miss estimates. It could be very volatile for a while longer and quite shaky. However, I think there's something way, way, way more important than both earnings and delivery numbers that we will discuss very soon. Now, we did speak about the delivery numbers and how they came in lower than estimations in my previous video, but essentially there is a very understandable, well, multiple understandable reasons for why this happened. Firstly, the macro environment. High interest rates basically make it more expensive for the average consumer to actually fund high ticket items that are very expensive, like cars. With anything to do with interest rates and the macro environment, it's cyclical. These things come and these go. That means it's not going to be this macro environment forever. And when this eases, of course, Tesla will hopefully do better. At some point, we will enter a pivotal period whereby the economy begins easing, rates start coming down, financing costs begin to decline, gross margins stabilize. This means lower costs and the sentiment shifts. And at this point, when this starts happening, we should see the general market, become more optimistic and start focusing again on growth. But having said that, this is for the future. And right now, I think things are going to remain in this period of uncertainty and risk for a while longer. The second reason, and this is one that Tesla posted about themselves, is that the decline in volumes was partially due to the early phase of the production ramp of the updated Model 3 at their Fremont factory and the factory shutdowns resulting from shipping diversions caused by the Red Sea conflict, and of course we had that arson attack at Gigafactory Berlin. These are obviously things that aren't going to happen all the time and they're kind of outside of Tesla's control. Stuff like this could happen to any big company and it's just really the way that the company handles it and gets back on their feet that matters. I said in my last video as well that when we look at the delivery numbers across the 4 quarters for Tesla since 2016, this was actually the first time that Tesla has not increased their Q1 delivery numbers. And I did try to show it visually here with this blue bar on the far right hand side, but the Q1 2024 numbers were lower than that of Q1 2023, but higher than that of Q1 2022. So when you're seeing these numbers come in, please, please, please place it into the bigger picture and then decide whether or not you think it's over for Tesla. And number 3, it wasn't just a difficult time for Tesla, it was difficult for the whole industry. BYD also reported that their sales numbers fell by 43% compared to Q4 2023. So widespread. Anyway, we're going to have the earnings, and like with most earnings calls, of course the numbers are important and we will absolutely analyze the numbers, and many people will. But I think more importantly than the numbers, and often more importantly than the numbers, is actually the narrative and the commentary that comes with the earnings, that comes with any sort of public facing announcement or meeting, investor day, whatever it is, a release. That's what's really important. And I think this one is particularly crucial. Obviously, what everyone wants, including Wall Street, including retail investors, including pretty much anyone with any stake in Tesla as a company, we all want Elon to give us some confidence, to give us some clarification, to give us some information about the roadmap of Tesla moving forward. And to be honest, it wouldn't be that hard for some optimism, some positivity to be seen. And I think that would probably, well, who knows with Tesla actually. I was going to say it would probably cause the stock to recover slightly. But you know what? We can't predict what Tesla stock, we can't predict what any stock's going to do. And just yesterday, Netflix released their earnings and they were pretty good and the stock dipped. So, we can't really anticipate what's going to happen. But I think the commentary is going to be really, really important. And of course, with the earnings, we also have the Q&A. So if you actually come to this website, you can see the Q&A has been opened and people have been able to submit their questions. Now you can filter this by multiple different ways. Most shares, so, someone who owns, 3.2 million Tesla shares have been represented by this question. Retail, not even an institutional investor, a retail investor with 3.2 million Tesla shares. That can't be an individual, surely. Just one person. Anyway, off topic. Let's actually filter this by top voted. So this basically is telling us what questions the most people want to be answered. And there's a very clear trend here. Look at this. The number one most wanted question is to do with Robotaxi. Following Tesla's Robotaxi unveil on the 8th of the 8th, what is the realistic timeline for launching a revenue-generated Robotaxi network? I would love that question to be answered as well. I don't think they're going to be able to give a really set-in-stone deadline. Maybe they're going to talk around this if they answer it. But anyway, next one. What is the progress on the cheaper next-generation vehicle? And the third one is, what are Tesla's main priorities and focus going into the next quarter? So it really does seem like people are seeking clarity. They want to be able to understand how Robotaxi and the next gen vehicle actually fit into Tesla's roadmap. And with all the confusion that's been happening lately with that article, people are just really, really needing that extra bit of confirmation right now. And talking about the false article and all of the uncertainty happening, we also recently had a downgrade. So we had a downgrade from buy to a hold and a price target movement of $189 a share to $123 a share. This was due to the cancellation of the mass affordable next gen vehicle. The analyst who actually did this said the following: the delay of Model 2 efforts creates the risk of no new vehicle in Tesla's consumer lineup for the foreseeable future, which would put downward pressure on its volume and pricing for many more years. I do kind of understand where they're coming from. However, we've got to remember that both Franz and Elon have already confirmed and said that it's not cancelled. The next gen affordable Model 2, whatever you want to call it, compact vehicle, is not cancelled. The article that came out claiming it was not true. Now let's expand on this a little bit more. So in the Q4 earnings call, I want to remind you of something Elon said. So listen to this.
And we're very far along on a next generation low cost vehicle, but we're very excited about this. And this is really going to be profound, not just in its design of the vehicle itself, but in the design of the manufacturing system. This is a revolutionary manufacturing system, significant, far more advanced than any other automotive manufacturing system in the world, like by a significant margin.
So he just said that we're very far along on our next generation low cost vehicle. And this was only in Q4. I don't think, and maybe I will stand corrected, I like to be corrected. And if that happens, fine. But I just don't see a world where in Q4 he would come out in earnings and say that they're very far along on the next generation low cost vehicle, and then now they would just cancel it. To me, that doesn't make sense. All I think that is happening here is that the FSD technology is coming along fast, maybe much faster than they predicted. And actually what they are doing is they are shifting gears slightly and prioritizing that project. I also think both the Model 2, I'm just going to refer to it as the Model 2, and the Robotaxi are essentially the same platform. And like I said in the previous video, they might be the exact same vehicle, apart from one, the Model 2 would have, an actual way for a driver to drive the vehicle, and the Robotaxi vehicle would be without a steering wheel and without pedals, so autonomous versus driver. We also then do have to wonder whether or not the Model 2 would be a two-seater, because I'm assuming the Robotaxi would be a two-seater. It makes the most sense, economically speaking, how people actually utilize their cars. But would the Model 2 also be a two-seater, or would the Model 2 be a slightly different platform in the sense that it would have maybe 4 seats, and then the Robotaxi would be the compact 2-seat? I don't know. All these little nitty-gritty things, these little details, we will understand more and more about them as time goes on. I don't really think we all need to argue about them right now. The main thing is FSD is progressing really, really well. They are shifting and prioritizing Robotaxi, and there's an unveiling on the 8th of the 8th. Energy is doing well, all of these things. These are what is important in the long run. Anyway, having said this, I do think there's going to be a large crossover period. What I mean by this is I think Tesla for quite a while will continue to keep producing personalized cars. And God, I hope this does happen for a while longer, because I want to own a Tesla. I want to drive a Tesla. I don't own one right now, and I absolutely need to at some point soon. But it does make sense that an autonomous vehicle will be their priority. But this won't just happen overnight. I don't think that they unveil the Robotaxi and then suddenly they're pumping these out in large numbers and you can't buy a compact vehicle or you can't buy one of their other vehicles. I don't think it will happen like that. The way I think it's going to happen is that they will still produce their compact 25k mass affordable vehicle. They will sell that, but they will be prioritizing the Robotaxi platform. I actually saw a really good tweet about this. So James posted this on X, and you should go and follow him. He said, Robotaxi Teslas will drive 5 times the miles of personal cars. This is 5 times displaced ICE miles, in internal combustion engine miles, 5 times or more value to users, and 5x or more profit to investors. Environment, customers, and investors are perfectly aligned here. Tesla can keep making personal cars, but every effort should be made to accelerate the introduction of and maximize the deployment numbers and usage of Robotaxi vehicles. So that's kind of in line with what I think as well. I think they will still make the personal vehicles, but they will shift their priority to focus on the Robotaxi, and there'll be a crossover period. And interestingly, I quite like this. Elon Musk says, this sounds about right. And one other thing that we need to remember here is that it's going to be quite difficult to roll out an autonomous vehicle, a Robotaxi fleet even. There will be many pushbacks. There will be many regulatory hurdles. And it's not a case of, okay, solve one hurdle and there you have it. These regulatory issues are going to be different by state, and they're going to be different then again by countries. So a mass global rollout will just not happen that seamlessly. It won't happen overnight. It's going to be a lot of effort, but eventually I think it will happen. So just to clarify, I personally think they will sell the 25k car, and that can be driven by a consumer, and they will carry on selling all their other vehicles and working on their newer vehicles that we expect to come, like the Roadster. And then they will also be doing the driverless vehicle. And during this time, they can really focus on the production line and making that as efficient as it possibly can, so that when there is a mass rollout of Robotaxis, they're ready. Oh, and also it's worth pointing out, Tesla stock hasn't been doing all that great lately, but many stocks haven't either. Maybe not to the same degree as Tesla, but it is worth pointing out to people that, let's put this into some context. The whole economy seems to be in a little bit of pain and a little bit of struggle right now. We, of course, like I've mentioned, we have the macro influence, we have interest rates, blah, blah, blah. We also have geopolitical uncertainty, and then we have Tesla-specific reasons as well. Just looking at the Fear Greed Index here, which I like to check in on every now and then. Definitely don't use this as your only judgment when it comes to investing, but it is now reading as fear. 1 week ago, we were in neutral. 1 month ago, we were in greed. That has changed very quickly. It feels like investors in the market is becoming very risk off and not very optimistic at all. And you can see that at time of filming this video, the number is coming up as 32. Just yesterday on Thursday, this was coming up as 34. So actually we're pushing closer and closer to extreme fear. This normally aligns with lots of sell-offs, people wanting to get out of the market, people thinking it's too uncertain, and stocks will then drop. Okay, so with all that said, now I want to shift the gears ever so slightly and talk about something that I think is really, really important. The whole Elon Musk compensation package. But first, let's just take a look at what Tesla stock has done between the beginning of 2019 and 2023, so over a 5-year period. Obviously, recently, Tesla stock hasn't been doing all that well, and it has been moving lower and lower. But over this time period, 2019 to 2023, the stock has performed incredibly well, especially when you compare this to the S&P 500 index or you compare it to another stock. It's managed to return investors nearly 1,000%. And many people have been very fortunate to be able to use their investment into Tesla to actually retire early. So it's done nearly a 10x. But also remember that Tesla has split its stock twice in that time period. So when we actually take a look at market cap, we can see that the market cap has gone from about $59 billion at the end of December 2018 to around $475 billion now. I think most people can agree that this is really impressive, but we've got to remind ourselves of the compensation case of 2018. So since this time, Elon hasn't really received any compensation, yet we have to look at everything the company has done since then. Let me just try to explain a little bit as to what happened in case you're completely new to this. In 2018, Elon Musk was awarded a compensation package which could be worth more than $55 billion. And this was contingent on certain milestones for Tesla's market capitalization and other targets actually having been met. And this compensation package was actually approved by both the Tesla board and a shareholder vote. So investors said absolutely, they said yes to this decision. However, roll back to January 2024. A Delaware judge actually ruled that Elon Musk is not entitled to keep this compensation package, citing that it was not entirely fair and that the process leading to the approval was deeply flawed. So basically, although Elon delivered on what he was meant to, he was not entitled to that compensation package. You should read the entire decision actually, because there's quite a lot more to say that we just don't have time to in this video. But recently, Tesla released a 14A proxy statement. So now shareholders need to vote once again on a few items. Number one, for shareholders to re-elect Kimball Musk and James Murdoch to the Tesla board. Number two, to move Tesla's state of incorporation to Texas. And number three, to vote on that 2018 Elon Musk compensation package that I was just telling you about. Now, within the 14A proxy statement, there was a letter to shareholders, and I absolutely recommend, really recommend that anyone that is interested in Tesla or invested into Tesla go and read that entire shareholder letter. It's not that long, and I will leave that linked below. But the bit that stood out to me the most was this. Elon has not been paid for any of his work for Tesla for the past 6 years, but he has helped to generate significant growth and stockholder value. To me, it's a no-brainer. Obviously, he should get financial payment for the value that he has helped create. But aside from the money, I don't think he even really cares about the money. He thinks it's incredibly important that he has voting power, that he is actually able to hold some influence over the company, and I actually agree wholeheartedly with that. I think the outcome of this decision is way more important and should be the primary thing that investors are focused on right now than the Q1 numbers or the earnings that are coming up. This will ultimately shape the future of Tesla. In January, he said this: "I am uncomfortable growing Tesla to be a leader in AI and robotics without having around 25% voting control, enough to be influential, but not so much that I can't be overturned." This is, in my opinion, what it should be. Like, he should have enough voting power so that he can influence, but he should not have absolutely the majority so that he can't be overturned when maybe he does something wrong. I think that accountability is absolutely crucial. Do let me know if you disagree with this, of course, in the comments below, but in my opinion, he is absolutely, without a doubt, needed to guide the next growth phase of Tesla, to guide the next wave that we are going to see. One of FSD, one of robotaxis, autonomy, energy, and Optimus. All of these things will bring Tesla's valuation to a whole different level, and that in turn will then be rewarded, will benefit shareholders. So I think it aligns with all of us to keep skin in the game, to keep Elon incentivized. Now, like I said, shareholders get to vote on this. So I encourage everyone that is holding Tesla to actually make a vote. It seems like this is way easier to do in the US than it is in Europe, but just go and have a look on X. There's loads of information circulating about this. So Tesla launched this page, protecting your investment and Tesla's future. And you can see here that the proposal for a CEO Performance Award 100% aligned with stockholder interests. So it says, in 2018, I won't read this actually, I'll let you read this for yourself. But one thing that I want to point out, in just 5 years, Elon delivered by hitting every single draw-dropping key milestone in the plan to deliver a total shareholder value return of nearly 1,100%. So he has clearly created value. Shareholders have absolutely benefited. Unlike most CEOs, Elon was entitled to receive no salary, no cash bonuses, and no equity. It doesn't make sense to me. Shifting gears again now slightly, let's talk about the layoffs that have been happening. So we recently learned that 10% of the workforce, of Tesla workforce, were laid off. Why? We ask, why are you laying people off? Well, Elon said this: about every 5 years, we need to reorganize and streamline the company for the next phase of growth. So basically, like with everything that I've been saying in this video and the last video, Tesla are now looking to streamline the company, reorganize the company to prepare them for the next leg of their growth journey. And what will that be? Well, I've just said it. Robotaxi, energy, Optimus is going to be the autonomous phase. Now, when Wall Street saw that Tesla was doing a 10% layoff, of course, like with anything, Wall Street and Tesla, it was the end of the world. It always is. But I think Tesla investors were hit up more on the two big departures that we heard about. So we learned that both Drew and Rowan, these are both high profile, high up people at Tesla, were going to be leaving. And these were two people at Tesla that were very, very popular among us investors. Some people decided to take a really bearish view on this news. Some people decided to take a really bullish view on this news. Personally, for me, I kind of sat in the middle. I'm really excited about the next growth phase, and I understand that they need to, get their ducks in order. Is that the right word? Get their ducks in order to prepare them to actually deliver on that the best that they can. But it's always a shame when good talent leaves. And it was just like when Zach left, or Andre, or anyone else. It's always been a little bit of I don't want them to leave. But it seems like both of these people left on good terms. For example, Drew said that after 18 years, which is a hell of a long time, he was leaving and he plans to go and spend some good quality time with his young family. But we must remind ourselves that this isn't the first time Tesla has ever done anything like this. And I saw this post on X from Sawyer. He's given a quick history of Tesla layoffs to help put this into perspective. So in 2017, 2% of the headcount got laid off, 2018, 9%, 2019, 7%, 2022, 10% of salaried workers, which was 3% of the global headcount, and 2024, of course, this one that we're just speaking about now, about 10% of headcount. So he said Tesla's global employee count expanded from 38,000 in early 2018 to over 140,000 in early 2024. I'm not sure people realize how many employees Tesla actually have. Laying off about 10% of your workforce is not a small number, but Tesla's last major round of layoffs was a while ago. Many companies were doing large job cuts between the late 2022 to late 2023. Of course, you'll remember some of them, but Tesla didn't. With everything that was happening back in 2020, I won't remind you of those times, but we saw that, many mega cap companies overhired, and then that resulted in lots and lots of staff layoffs. So lots of mega cap companies do layoffs all the time. And sometimes when a big company announces that they're doing a layoff, the stock price actually shoots up. But of course, what happened when Tesla announced that they're doing a layoff and they said why they're doing a layoff, it's just the way it is. You can't predict these things. We also had Elon saying this on X: not quite betting the company, but going balls to the wall for autonomy is a blindingly obvious move. Everything else is like variations on a horse carriage. So it's pretty clear there that this is the way that Tesla is moving going forward. We've seen this come in for a long time, but they are, stamping it, making it very clear, banners, fireworks a lot, that they are moving away from being a car company as their main thing to actually having autonomy and AI being their main thing. They are clearly very confident on the progress of FSD, Robotaxi, and Optimus. And I think this shift, this transformation in society between people driving cars and autonomous vehicles will absolutely happen. If I haven't made that clear, more clear already, but it won't happen overnight. People will be skeptical. When a new technology, a new innovation, when a transformation takes place, people naturally are very fearful and very skeptical. There is a lot of uncertainty, there is a lot of panic. I know we don't know this for sure, but I imagine it was exactly the same when horses and carriages were the mode of transport. When the first vehicle came out, and then when it started getting adopted, I'm sure many people said, oh God, no. That's not going to be used. I'm sticking to my horse and carriage. That looks way too dangerous. It's never going to be widely adopted. And then look what happened. There is going to be, and there already is, the fear that autonomous driving will not be safe enough. And this is absolutely Tesla's priority. I said this in my last video, and it will remain Tesla's priority. And of course, no one wants to get in a vehicle, an autonomous vehicle, that is not safe. So Tesla will absolutely make sure that they, without a doubt, have enough data to prove that it is safer than a human-driven car. I do often wonder actually how Tesla's revenue streams will look in 1 year's time, 2 years' time, 5 years' time, and 10 years' time. It's going to look vastly different to what it does now. We're already seeing energy ramp in terms of revenue, but that's just going to keep going in my opinion. And then what we're going to see is that the majority, and again, this is just my opinion, not financial advice, we're going to see that the majority of Tesla's revenue is actually being made up of SaaS margin revenue streams, which will be humongous. I did speak in more detail about the economics, the revenue streams, and the Robotaxi opportunity in last week's video. So if you haven't watched that already, I will leave it linked on the screen now. We've also recently learned that Tesla have dropped their FSD subscription prices in the US and in Canada from 199 USD per month to $99 per month. I was taken aback a little bit by how quickly they actually moved on this. I think what happened is people were suggesting to Elon to actually lower the price of FSD to $99.79, whatever people were recommending on X, and Elon actually interacted with one of those posts, and then bam, seemingly the next day an announcement came. But it goes to show us that Tesla don't do what other companies do. They move so fast. I think that if that decision was going to be made by a different company, it would have taken like months and months and months of deliberation. It would have taken many board meetings, many votes, and then we would have maybe seen a price reduction. No, Tesla weren't messing around. They have one aim at the moment, and that is autonomous driving. That's their next thing. And they're going to do what they need to do to make that a reality. And the reason as to why a lower price of FSD aligns with this is pretty simple. It will get more people using FSD. This means more awareness. And this is people that previously have never used FSD. More people using FSD then does a few different things. One, it gives them a chance to prove to more people how good it is and how safe it is. And two, it means that Tesla can collect more data. They can have more miles driven by FSD. They can then improve FSD using that data. And we've already seen that they hit a massive milestone in terms of the FSD miles driven very recently. And this will keep moving now very quickly in that upward direction. And of course, this then means that they have more data to prove the most important thing, which is this is safe technology. And even at $99 per month, this is very substantial because this is SaaS level margins. But I think what's actually going to happen is they will use this, they will improve it, and then in the future, they will up the price of FSD. All right, so with all that said about autonomous driving, let's just park that. Or we'll let it park itself. We'll let that park itself for a minute, and we'll just move on to talk about Optimus. Well, not Optimus actually directly, but Atlas. Boston Dynamics humanoid robot. We heard that it's retiring. It's retiring. It wants to take its pension funds and go and live a nice life after all of its hard work. And then they came out and unveiled their newest Atlas humanoid robot. And it's pretty flexible. Take a look at this. So is this concerning for Tesla? I don't think so. Let me explain why. Well, firstly, robotics as an industry is moving forward and advancing. This is actually quite exciting. It means that more companies are seeing that this is the future and they want involvement in that. This means that the demand could really be what people have been predicting that it will be for Tesla for a very long time. Now, it is going to be a really hard field to crack, but I do think eventually there will be different companies doing their own thing in this. I don't all think that they're going to be mass producing a humanoid robot to be used in factories and in homes like Optimus is planned to be, but in some way, lots and lots of companies will be using robotics. Now, secondly, I don't know much about this new version of Atlas. It's only just come out. I don't really know much about this newer model at all. But speaking about Boston Dynamics Atlas in general, to me, it was never really a direct competitor of Optimus. Both the original Atlas and Optimus are humanoid robots, but in my opinion, there's so many differences. They have different purposes, different functions, and Optimus was always designed and it was always meant to one day be mass produced. I don't think that was the plan for Atlas. And it makes sense as to why it's retiring. And I imagine that it would have been very difficult if they did decide to mass manufacture Atlas. Because firstly, they don't have, as far as I understand, they don't have the structures in place like Tesla do with their factories, their efficiencies, all of this stuff, to mass produce something like that at scale. And secondly, the way that Atlas versus Optimus was trained and built is very different. Now, I'm no expert on this by any means, although it is absolutely fascinating and I want to do way more research. As far as I understand it, Atlas was built on heuristics, whereas Optimus is neural nets. So again, it would be very difficult to scale Atlas. I actually made an entire video about Optimus and the revenue potential of it. It's mind-blowing. It's absolutely incredible. If you think the Robotaxi is going to be big, then and energy, if you think Robotaxi and energy are going to be big, just look into the numbers that potentially Optimus could do for Tesla. Watch that video. Again, I'll leave it linked on the screen now. And I think I'll do an updated version of that soon. In terms of what I'm doing with Tesla stock, I am continuing to dollar cost average. I'm continuing to buy. Maybe I'm buying a little bit more often now than I did a few months ago because of the prices that we are seeing. It's, in my opinion, it's a no-brainer. However, I'm equally aware that there'll probably be more of a volatile time coming up for a bit longer. If you want to make sure you stay up to date with everything happening in the world of Tesla, please consider joining my free weekly newsletter. I'll leave that linked below. And if you like short form content, I'm actually having a go at TikTok now. So if you want to follow me on there, it would be appreciated. I'll leave that linked. And with all that said, I'm going to leave it here for this video because I'm very aware that I could talk about Tesla all day. Let me know in the comments below what you want the next video to be. I've heard some people ask for a video on Optimus, others asking for a video on Tesla energy. So let me know what you want to hear about next in the comments below. With all that said, thank you so much for watching and I'll see you in another video very shortly.